Howdy, Jacob here. Today we're looking at Assertio Holdings. It is in the pharmaceuticals industry, $76 million market cap, 38 million enterprise value, selling for under $1, which is interesting. They have to raise. Okay, so to be in line with the NASDAQ, you need to be above $1. They usually give you a bit of time to do such, but if they don't do it, they might have to become an over-the-counter uh, issued company. 5.6% held by insiders, not super high for a company this small. Their revenue is just up a little bit over the last 10 years, but it grew like crazy to 2016 and then has been going down quite a bit. And then 2022, a bit of a spike again. And such a spike that, yeah, just a humongous earnings per share, humongous return on invested capital. Okay. Pharmaceuticals interesting. You definitely have to look at the pipeline, see what kind of drugs they have, see what kind of see the duration of their whatever trademarks and stuff. My gross margin down a bit, 7%, but still 88%. Sounds about right in the pharmaceutical business. Recently, operating margin's huge, but in the past, as low as negative 40%, as high as 60%. So interesting there. Balance sheet: 65 million cash, 66 million long-term debt, no short-term debt. So essentially, roughly the same there. You're just looking at, their main thing is other intangible assets. So I assume they're trademarks and whatever the trademark equivalent is for issuing drugs and such. Okay, so cash flow has been a lot more positive than their earnings. That's a positive sign. They have a huge amount of depreciation and amortization with no capital expenditures. So that's the reason for their much more positive cash from operations, which nothing wrong with that. Their acquisitions, they've acquired quite a bit of things in the past. Huge, $1 billion in 2015. And their market cap is 76 million. I just find that hilarious. And then they divested 2020, $500 million. But use of cash flow since 2015, been paying down a lot of debt. So they've reduced their debt quite a bit to where their cash on hand and debt is the same. So that's not bad. Issuing the shares, they've actually issued quite a bit more shares than they've repurchased. So not necessarily a bad thing if you're not making money, but it looks like they have positive. Looks like they have positive free cash flow. They're just paying down debt a lot more than their cash from operations is. So it's going to be interesting to see how they utilize their cash once their debt is, what it is now, and if they still produce, on a 5-year average basis, maybe $40 million, $50 million. Yeah, this is going to sound like a screaming deal, I'm sure, since I just said their 5-year average is maybe 40 million and their market cap 76. So I might just so I'm not fluffing with everybody, I'm going to look at their historical ratios and just kind of go off of what I see for that. So on a price to free cash flow basis, yeah, this is almost a business I don't even understand. Like, how do you have price to free cash flow that averages like 3? Like, I guess I kind of understand it when a company has a lot of debt because they're basically, because the PE and the price of free cash flow is based on market cap. So obviously, if they have a lot of debt, then on an enterprise value basis, it makes more sense. But in a company like this, it just seems weird to me because you can invest in the company. Let's say you bought it all for 78 million, and you make 40 million a year. That return is just absolutely bonkers. So it's just something I just don't quite understand. But I'm still going to be using historical data to calculate to use in our valuation here. As for revenue growth, I mean, maybe 0%. It's kind of all over the place. So I don't know. Company this small and such, I kind of have to do more research on because it's just this small, this volatile. It just seems a bit wonky. So maybe 10, 20% share change. I don't know why they've been issuing so many shares. It seems ridiculous to me. Okay. Maybe 10, 30%. Okay. I mean, it doesn't look like a deal at all, but I mean, based on their free cash flow, which is interesting, I feel like if they can keep, 50% to the bottom line and their market cap is 76 million, that's just interesting. And then what can they actually get for this other intangible asset? If you're looking at like from a safe haven standpoint, are these intangible assets really worth 198 million? Could they be worth more or less? Are they worthless? That would make me feel more comfortable in investing in the company if I knew that they had hard assets, which they don't have hard assets, but they had like true assets to back them up that were actually worth a good amount and wouldn't be sold at pennies on the dollar, nickels on the dollar or something. So to me, it's just based on my assumptions, it's not a buy. And again, I'm using these P and price for cash flow based on history. But yeah, if you wanted to do more research into this, I don't blame you. I would just want to understand why their price to free cash flow is so low. Are their numbers real? Second of all, and then understand that if you're under $1, then that for a good duration of time, the NASDAQ can kick you out. So hopefully that helps with your research. I mean, do it in conjunction, I'm sure. But yeah, I hope that was helpful and everyone enjoys the video. Thank you.